Hey Captain, if it's your first time here, welcome. My name is David, and on this channel, I share my financial journey from broke and desperate to achieving financial abundance. And if you're returning, awesome, let's get this financial freedom. So, in today's video, I wanted to share my game plan. You know how companies have 12-month game plan or 5-year game plan, and they show you their playbook, the things that they plan to do in the next, say, 12 months or something like that. Well, this video is a breakdown of that. And part of the reason I'm sharing this with you is I realized after talking to a friend of mine, the reason I share my details about my finances is because I am scared and I'm in a lot of pain. And my hope is that I make your journey by sharing how I'm planning to get myself to from broke to financial abundance. By sharing that, I hope to make your journey a lot easier than mine has been. So, uh, without any further ado, let's start this video. Let's jump on the computer and I'll show you my complete 12 months to 60 months game plan. All right, let's get it.
So before we begin, let's start with a disclaimer. The advice given in this video may not be best suited for everyone and is not a substitute for individualized assistance by a financial professional. So just make sure what we're creating here is more of a guideline and not a final product for you. I'm just showing you how I'm applying it in my own life. All right. So the first thing I came to realize was what we exchange is our time and our energy, basically our life force for everything. And it's not necessarily money. So you need to make sure your goal is worth exchanging your life for, because that's essentially what you're doing. Now, another thing that I learned was making mistakes makes you smarter. So when we're learning, ensure that you make mistakes, and if you can, make mistakes as fast as possible so that you can make progress in your endeavors. Now, the final thing is the benefits of being broke, and I've experienced this in the last 6 years. I've experienced it 3 times. It makes you creative. So do not feel bad if you're presently in a state that looks like broke. So what will you look at in this video? I'll take you through my thoughts of moving from stage 0, where I presently am again, to 1, 2, 3, and 4. And I'll show you how I plan to do that quickly. Quickly is in the next 12 months to 60 months. And then we'll jump on the Excel and I'll take you through my specific action steps and what I'm doing for myself. And then finally, the next obvious step, which will be to raise capital. And I'll also show you social proof of what I've been able to achieve, the first initial step. Okay. So let's look at the statistics according to Kenya so that we know who we're playing, or rather what game we're playing. So 8,500 Kenyans are the only ones that are worth $1 million and above. And this is according to Africa Wealth Report for 2022. So the book that they're most likely listening to or reading will be The Millionaire Fastlane. And a book that would apply to the way they're thinking is Think and Grow Rich. Now, under that level, there's the 1% of Kenyans, according to the Knight Frank 2021 report, that are worth $20,000 or 2 million shillings and above. I think that number is really low, but let's just go with that as is. And then what does that mean for the other people? Let's even give them an extra 1% on the 1% people. So that means 98% of Kenyans are following the wrong script. So when you're seated with someone out of 100 people, the likelihood that you're talking to someone that is wealthy is really, really low. They might make a lot of money, but they're not among the 1% or the 8,500. So presently, this is where I'm at. And the book that most likely would summarize this area would either be The Sidewalk. This is still within the Millionaire Fastlane, or a book that I made up, Work and Grow Rich. So you can see the script doesn't really work for most Kenyans. So how do I plan on flipping the script that I have to join the 8,500? So I've presented this before, but if you're new here, let me just break it down for you. There are 7 stages to achieving financial independence, and I like highlighting the first 4, but in this video, we'll go beyond the 4. We even break down the 4th one a lot more, but generally, this is how I track my progress. So presently, I'm back in stage 0. As of 2021, December, I was at stage 2, where there was more coming in than going out, and I had some savings. So presently, more is going out than coming in. And my goal is to quickly get through this stage. So this is the stage I'm saying. If I look at my videos, the last 6 years since 2017, I've been at this stage. This is the 3rd time. And each time I get here, I get out of it a lot faster. The first time, it took me about 3 years to get out. Second time, it took me about a year and a few months. And this time, I think it'll take me probably 4 months max. But this is how I track my progress. So for you, just test yourself. Is more coming in than going out? If more is coming in than going out, then at least you're at stage 1, financial solvency. If you have some savings on top of that, then you're at stage 2. If you've cleared your debt, you're at stage 3. And if you have 6 to 12 months of your living expenses saved up, you're at stage 4. So that's just the general steps, the first 4 steps. Let's get some math into it so that you can also engage in what I'm going to do. Now, let's figure out what your net worth should be at your current age. So you take your current age times 12 times your pre-tax income. Let's assume you make 100,000. If you make 100,000, then in a year, that's 1.2 million times my age right now is 35. So that's about 42 million. And divided by 10, so that will give me a net worth of 4.2. Presently, I am way below that level. That means I am an under accumulator of wealth. What I'd like to be is a prudentious accumulator of wealth. And I'll show you how I'll get there. Now, let's also calculate something called the financial independence number. Just take your monthly expenses and multiply by 300 months. Or if your expenses fluctuate in the year, just summarize them annually and then multiply that number by 25. Using the example of 100,000, that means 100,000 times 300 would be 30 million, and 1.2 million times 25 would be 30 million. So that's the number. If my expenses are 100,000, then I need 30 million seated somewhere, cash flowing enough to take care of my lifestyle of 100,000. And how do we look at that? So we'll jump into the Excel, but also let's make a few assumptions. Now, first, investing is a plan. What I'm showing you here is my plan, and a plan is very personal. So in order for the information I present here to be applicable, I'll use certain generalizations. The first is we will use bonds, and the bonds will generate at 12%. And also the base number is 100,000. Now for each person, that base number, and we'll look at it, is very different. Now, how do you figure out what your base number is? Just if no income comes into your house, how much do you still need to spend? That will be your base number, right? So hopefully you have the 3 numbers ready. And let me just pause this, and then we can jump on the Excel. So welcome to the Excel that I use to ideally guide me from broke and desperate to achieving financial independence. Now, it has a lot of information on it. So just follow my guidance in terms of the mouse clicks. So first, let's look at life and how many chances you have to achieve financial independence. So life is divided into 4 quarters. Before you get to 25, you can look at that as freemium, where you have a free subscription and majority of your bills are paid by someone else. By the time you get to 25, generally, you have to take care of your own bills. So let's look at that between 25 and 35 as the first quarter. And then second quarter will be 35 to 45, third quarter 45 to 55, fourth quarter 55 to 65, and overtime 65 plus. So Presently, I am 35, meaning I am in my second quarter. When I started this channel, my hope was to achieve financial independence by the time I got to 35. So I had a lot of learning to do, and I wasn't able to do that. But the benefit is I have accumulated a lot of knowledge over the last 6 years, and I believe I'll be able to achieve it in the next quarter. Okay. So seeing that I'm in the second quarter and I hope to achieve financial independence in the next 5 to 10 years, what am I looking for? What is the driving force for me? So what I'm looking for is time freedom. Now, money is used as a tool in this case to buy back my time, meaning no one tells me what to do, when to do it, and how to do it. And then also, because travel is a big deal for me and my family, I'd like location freedom. That irrespective of where I am, I can generate cash flow. And then finally, I'd like financial freedom. The idea that I don't worry about my basic bills, about emergencies. I can cover them and then some. That will make me very, very excited about this subject. So this is the goal that I am showing you that is worth exchanging my life for. Because I'm essentially going to exchange the next 5 to 10 years of my life to achieve these three goals. So in your case, what do you want? When do you want it? With who do you want? As in, the idea is, can you have what you desire? Essentially, unstructured time where you decide exactly what you do with your time. That would be the guiding force. So you can use your feelings in this case to figure out what would excite you. And remember, your feelings is what can absolutely decide what your goals are and what your goals won't be. All right, so let's jump into the numbers. Now, there are basic, not basic, there are certain categories. You see how Maslow has hierarchy of needs? So even your finances have similar needs. So in this case, we look at something called the baseline or basic living. This amount of money is the amount of money I was stating before, where if no money comes into your house, this money has to be spent because you need to pay rent, you need to eat, you probably need steamer, school fees if you have kids, and the like. That is the amount of money that no matter what, your family can't go below. And if it does, the quality of your life changes. So that's the number you put here. We'll use 100,000 as a placeholder, but the idea is as I go through these numbers, you do with your own numbers, right? So let's just go over what this is. Now, the idea of this is to allow you to expand your vision, because majority of the things that we're told is we figure out the baseline and probably survival. At this point, your ambitions are squashed. You're trying too much, being too greedy, but we don't get to the point where we actually ask ourselves, how do I feel about this number? How do I feel when I only make 100,000 or baseline number? Yeah. Do you feel comfortable? Do you feel safe? No, you're just feeling most likely just at survival. For survival, what does it feel like? You're okay. You're not umiaing sana, but you're still not doing everything you can. For security, for me personally, security means I am able to take care of my house and some of my loved ones. But comfort allows me to get the things that I actually want, like the car I want to drive, the house I want to drive. So that's why, for me, this is the goal that I'm going for. I'm going for comfort. So I'd like to be able to spend this amount of money every month. That means my portfolio needs to be about 300 million and cash flowing 3 million a month. So I'm able to spend 1 million a month. All right. Essentially, the question you can ask yourself is, and I wish we were asked this when we were kids, is what do you want to be when you grow up? Do you want to be financially secure, financially comfortable, financially free, or financially abundant? And now tie that goal into whatever career path you are told to go into. Okay, so now that we know We know the two numbers. We know present baseline, which is the current expenses, and the goal. Let's look at what life would look like if we go for the goal, right? So this Excel allows me to figure out my financial independence number. So I'd like to be able to spend 100 million shillings a month. And I will assume inflation is 12%. And my bonds would return about 8%, 12%, which means there would be a difference of 8%, which having reinvested after living on 4%, having reinvested the extra 8%, it would negate the inflation effect. So my total portfolio would need to be about 300 million to be able to achieve that goal of sustainability. Now, let's look at some other things before we put in numbers here. At financial comfort, I would need an emergency 6 months emergency fund of about 6 million and 12 months about 12 million shillings. Now, how do you beat the Joneses? This is the part where that number matters the most for me, because I have a general idea of where I'd like to live and how much I'd like to be able to spend in terms of housing and cars. So how do you use this as a guide? Just think of it as traffic lights. This is go, neutral, and bad. Or you can think of them as living below your means, living within your means, living above your means. So if I can spend 1 million shillings a month, then that means I can comfortably buy a car of up to 2 million shillings. If I want to live within my means, I can buy a car of up to 4 million shillings. But if I drive a car worth 6 million shillings, I am living above my means. The other way of thinking about it is your portfolio. So in this case, say I want a car for 2 million shillings. If I have 24 million shillings in a portfolio, then I can comfortably buy a car worth 2 million shillings in cash and have 22 million cash flowing enough to sustain the car. Now, for the house in Nairobi, because I love the convenience of Nairobi, between 12 million and 24 million, you can get a pretty good house. So we'll use 1 million shillings as the base goal. This is my eventual goal. But right now, let's figure out. But right now, in order to be able to get there, I need to be able to cover my base. So let's look at the base. Sorry about that. Just a second. Okay, so for the base, which is this, let's figure out what we need to do to cover the base. So the base requires 30 million shillings to be able to be covered 100% by my portfolio. So how much would I need to be making in order to cover the base in the next 5 years or sooner? Since eventually I want to achieve financial comfort in 5 years, I need to achieve this number sooner. So let's try 500,000 shillings. This is net of taxes and giving. So it'll take me 10 years. If I earn 500,000 shillings, meaning I need to earn more. So let's earn 1 million shillings. So if I earn 1 million shillings, then that means it will take me 4.8 years. Fine, let's work with that. So that means whatever your base expense is, you need to figure out how to 10x your take home in order to achieve your financial independence number for that spending level in 5 years or less. Okay. So at that time, my portfolio will be worth about 51 million because of inflation. But once I start withdrawing 4% from that, my baseline number will always be covered. Right. So part of the reason I find the idea of financial independence confusing is because once we hit the 30 million mark at baseline is financially independent. But if we increase our expenses to financial survival, then all we've covered on financial survival is 100,000. 150,000 still needs to be covered by our portfolio. Hence, the additional amount of money here. Same goes for all this. So financial independence can be achieved at each of these stages. And note, each of these stages is stage 4, A, B, and C, and then stage 5, which I don't think I've highlighted too much in this channel. So each of these stages has its own financial independence number, which is this. So for you, you're just determining what number would I like. For me, I've decided this is. So let me show you what my game plan looks like. Now, starting point for any goal is the desire to achieve it. And the fact that you want it means you have the capability within you to achieve that specific goal. So, first thing we need to realize is we get paid for value and not time. I assumed as an employee, I got paid because at the end of the month, whether I made business or not, I'd still get a salary. But when I changed from employee to an agent, which is commission only, I realized I'm being paid for production. Now, the rich do not work for money. This is according to Robert Kiyosaki. They make money work for them. So in our case, to make the examples easy, however we're going to generate money, we'll put it in bonds and most likely create a legal entity around it. But let's just go with, we'll put it in bonds in order to cash flow. So what is my monthly income goal? I'd like to be able to take home 1 million shillings a month, as we've seen, to take care of the baseline number. So the first thing I came across was the realization that my psychology affects my success. When I was an employee, there are certain things that were required of me. My ability to trade, my ability to socialize, my ability to basically do my job. And I realized over the last 6 years of doing that particular job, if I was asked these two questions, and which I asked myself to make the decisions I made, was, am I able to do my job? So my job was relatively easy to do, but am I willing to do it? And when I asked myself at the beginning of this year that question, the answer was no. I wasn't willing to continue doing my job as is. So first thing I did was resign. And then the next question I asked myself was, what am I willing to do? If I'm not willing to do my job, what am I willing to do? Now, there's a skill I've been developing since 2012, and it's essentially pattern recognition, my ability to trade in the global markets. So that's the skill I was willing to focus on, build, and probably figure out how to get employed to do it. So there are two approaches that I basically followed. The first one was figure out how to get employed to do my specific skill and start a side hustle that allows me to employ my specific skill. So this will be a breakdown of that. In your case, when you're thinking is, what do you want to be? Do you want to be an employee, self-employed, big business, or investor? So an employee, you exchange your time and skills in order, you exchange your time and skills in order to get a salary at the end of the month. If you're self-employed, you're essentially working for yourself and you're doing the same thing. You're exchanging your time and skills in order to generate an income for yourself at the end of the month. If you're a big business owner, you have a business and you probably employ people or systems that work for you. And investor is where you have assets that cash flow, whether you actively work on them or not. Now, for me, these two categories are the ones I've decided to tackle. First, I thought initially I'd go as a self-employed individual, but I realized my bills require to be covered. And my goals, as you see, require time. So my baseline needs to be covered, and that's the direction I decided to offer my services in terms of employment. I figured out there are institutions in Kenya that would be willing to employ me for my skills. So I'll tackle this problem in two ways. I'll tackle it as an employee. I'll tackle it as a self-employed individual or a side hustle. So there are certain laws that I'm applying when it comes to compensation. Now, the money that I'm going to receive or the money that I am receiving is based on three things. The need for what I do, my ability to do it, and the difficulty with which there will be in replacing me. So my former job, there wasn't too much difficulty in replacing me because of how I applied myself. But with the skill that I've developed, my ability, which is the skill, makes me very difficult to replace because this is something I'm willing to be the best at. Okay. If now the guiding principle will be if you want to earn more, build more service. And what I'm describing here is how I'm building my rich life. And you have to start from a point of possibility and not think of, oh my God, that is such an ambitious goal. Okay. So the law of affection as seen in the Millionaire Fast Lane, there are two ways to make more money. You can either use scale and or magnitude. So scale is where, say you have 1,000 clients and you're selling something worth 1,000 shillings. You'll be able to make 1.6 million. Magnitude is where you have, say, 2 clients or 1 point something clients, 1.6 clients that pay you 1,000,000 shillings. You go home with 1.6 million. The idea is you can approach making money in one of two ways or both. So, what are the other rules that you have to follow? When it comes to anything that you want to offer in the marketplace, you are basically controlled by 5 rules. And the more of these rules that you say yes to, the harder it is to replace you. So do I control my specific field? No. The specific field I am in is trading, and I do not control the market. Is there a difficulty in entry? Yes. Only 5% of traders make money. So that means there's a very, very small number of us that can consistently make money. Is there a need? Yes. From the conversations I've had and even the way the market is growing, yes, there's a big need for that. Do I have control of my time? No and yes. Because I trade a specific time, I tend not to be the one to decide the time, the market does. So no, I'm not in control of that. But does it consume my entire day? No. So in a small way, I am in control of my time. Is there ability to scale? Yes, because the skill is repeatable. All that changes is the amount of money that I control. And I'll show you this in the future slide. So there are 4 asset classes that we focus on. This is according to Robert Kiyosaki. This is business, real estate, paper assets, and commodities. So you decide where in these 4 asset classes you would like to start. For me, I want to start in the paper assets category because I trade currencies and indices. And why do I do this? Because I realized from 1971, we stopped living in an environment of money and started living in an environment of currency. So I'm just playing the game according to the rules that were set in 1971. So first thing I'll play is paper assets and then eventually incorporate. And out of the cash flows from the incorporation, whether family office, hedge fund, or trust, I'll invest in real estate. And then eventually probably go into the commodity section, but this will be an eventuality for me. The first 3 will be an immediate action. So in order to show you what is possible, let me just show you some of the prop firms that are available. This is a list. I know it's colorful, but this is a list of a few proprietary firms that I have considered trading. So in this case, if I was to trade for something called True Forex funds, I'd start with a $10,000 account, and out of the profits build up to $100,000 and eventually $1 million account. Now the profit split is 80-20, 80 in favor of the trader. And the first step, you keep about 640 and then 6,400 and then 80,000. All this is in dollars. Now, the first phase income would be about $87,000 if all of them are in play, minus potential taxes and deductions and using an exchange rate of 114, that will mean I take home about 5.9 million. And all this can be built up to phase 3, where we're controlling 94% of the firms of the income that are proposed here, and that will put an income of about 30 million. But let's look at this in terms of where do we actually start. So at the beginning of the year, this is where I was at. Zero income in terms of investment banking and zero income in terms of agency for the investment banking. So I opted to go for a firm called My Funded FX. There was a free competition in December, and I ended up among the 2% that got a free account. So I ended up as number 17 out of 1,002 individuals. So they gave me a free 5K account, which I am presently trading. Now, once I get it funded, I expect to generate about 32,000 from it. And from this, I'll buy a Smart Prop Trader 50K account that should be able to generate 320,000. So the first or the next two obvious steps would be this. But eventually, my game plan is to control about $10 million out of all this prop funds. So let's look at the cash flow statement. This is according to Robert Kiyosaki. And I'll show you the difference between this statement and what we are told to do in terms of side hustles according to Centonomy. So obvious taxes, giving back, and the basics. Remember the 100,000 that we're using. Now we'll save the difference, which will be about 100,000, and then we can keep probably 11,000. How does my financial statement, my balance sheet look like? So assets would be this, and liabilities will be the loans. So I'd still have a negative net worth. Now, let's look at this in terms of what Centonomy focuses on. Okay, so let's look at the Centonomy financial statement using the exact same example. So in the example before, I said that the first two prop funds are generating cash flow. So before the split, this is the amount generated. After the split, this would be the amount. Now, how does that apply? So same thing, taxes and giving would constitute the same amount, but now the operating expenses from the basic 100,000 needs to include the 2 employees that are trading and also travel expenses and administration costs. So that would triple the expense, meaning unlike here, when I'm running it as a side hustle, just the first 2 prop funds are enough to cover the basic, which is this 100,000, and also have savings and remain with some money. If you run it as a business and you factor in all the expenses, then we're running at a loss. So we need to add an additional prop fund here. Now the target for this prop fund tends to be 8%. That's why you're seeing the numbers that I'm placing here. So that will mean take home about 640,000, and that allows us to cover all the expenses and leave a profit for the organization. This is not the eventual goal. So first, Centonomy says the goal of any business is to make a profit, but profit is not your money. So this is not my money. What I take home is probably this, but my basic expenses will be covered. Now, this is not the eventual goal. My eventual goal is to figure out how to make 1 million shillings a month. So what would it look like, hopefully by the end of December, if I go through the remaining prop funds? Would mean before split, I bring in about 13 million. After split, I bring in about 9.9 before taxes. After taxes and giving, I'd still maintain the same base no matter what, and probably increase my employment expenses. Ideally, because if I was to hire someone to do this in the market, what are the competitive rates? This would be it. And also increase administration and general expenses. So that leaves the company with about 5 million after taxes and after expenses. What happens then? Now, this is the money that's placed in bonds, in real estate, in whatever. This is what grows the company's pot. And since my basic expenses are covered within the organization and probably my salary, that means the more I grow this, the more I can sustain this. That would be a different way of thinking about it. Now, this would be spending of about 1,000,000 shillings. Eventually, my company would allow me to live the life that I want, spending the amount of money I want, and at the same time, it grows its profits. So I think I've come to the end of my video. I hope I have transferred value to you. I hope I have at least answered a few questions you've had about the idea of creating your own financial plan. And if you have any questions, please leave them in the comments below. I would love to see your thoughts, your opinions, your suggestions. And until I see you on the next video, have a great one.